Welcome back to another episode of Multifamily AP 360. And today's our guest is Fred Moskowitz. So welcome, Fred.
Thank you. Thank you. It's great to be here.
Sure. Little bit about Fred. Fred is an educator and best-selling author who has trained countless investors from all walks of life on how to create passive income streams of their own. As a fund manager, Fred manages a mortgage note investment fund and is considered an industry veteran within the note investing arena. Fred teaches the concept that individual investors are able to step into the shoe of the lender through note investing and effectively be the bank. Fred takes pride in collaborating with investors to help them grow and profit in the note space, as well as being trusted and valued resource in the arena of alternative investments. So with that, Fred, you want to add anything to your background?
Yeah, thank you. It's great to be here. Yeah, I'll share a little bit about my background. I came from a long career in the tech industry, working as a computer engineer. And for any of you out there that work in the tech industry or know a lot about it, it is a cyclical environment. It's a roller coaster ride, and the swings are far. And so it's a great industry. I've always loved it. However, I learned firsthand that I was taking on this huge risk because I was relying on my paycheck as my single source of income, the only income I had, right? And so I want to uh, invite you to think about and consider this. How risky is your paycheck, right? If you're out as a professional working in the field you're working in, how risky is your paycheck? It's subject to all of these factors out of our control, right? We've got inflation, and there could be economic downturns, layoffs. The company you work for could go under, right? All of this is completely out of our control. And so for me, what I wanted was diversification in my income sources. And so this is what led me to getting involved in alternative investments. It's because I wanted to build cash flow and income. And with investing, you're generating cash flow. And the great thing about that is that you earn income while you wait. And so every investment you make, it's like turning on this faucet of an income stream that starts almost immediately. And so that's what led me into investing, and specifically mortgage note investing, right? Where we're investing in an asset, it's secured by collateral with value, and that really helps to manage the downside risk because of that secured position we're in as a note investor.
Got it. Thank you very much. So there are different kinds of real estate investing or different asset classes. So
Yeah.
what is the reason behind choosing note investing, mortgage note investing?
Well, I'll tell you, there are many types of real estate that people invest in. You have single family homes, you have apartment buildings, multi-unit, there's commercial, retail, office, multifamily, all of these areas, medical office, right? We can really uh, dig down into some different niches there. The common thread among those transactions is that there's always leverage used. There's debt. Mortgage and a note are used to purchase those properties. And so, what I always like to talk about is how about if we look at investing in the paper, the mortgages and notes that go with all of those different properties? That's what note investing is all about. And you can buy loans on the secondary market, and you don't have to be the one that originated them, right? There's plenty of banks and lending institutions that create notes, they originate the loans, and then they turn around and sell them on the secondary market. And when those loans are bought and sold, what's customary is that they get traded at a discount. So you can actually buy mortgage notes for less than the amount owed on the debt. And when you do that, it increases your rate of return on your investment. So it's really powerful.
Got it. Thank you. So Are you focusing on any specific asset class in mortgage notes, like single family or commercial, multifamily, or anything like that? And share me like how exactly the process works.
Yeah, absolutely. I focus, yes, on residential single family homes. Think of it as what Fannie Mae, Freddie Mac calls a residential loan, which is 1 to 4 units. Um, Mostly they're owner occupied properties. And the way to get involved in that, how do you get started with mortgage notes? There's really two ways to do it. The first way is to go out in the secondary market and acquire notes, buying and building up a portfolio. But also, you can invest, if you want to be a passive investor, you can be investing in a note fund where the fund managers raise capital from investors who want to be passive through a structure similar to a syndication. And the fund managers pool the capital together and then they go out to the secondary market and buy notes in bulk quantity. And they are in a position to negotiate better discounts because of that. And so, for a lot of folks that want to do it passively, it's a great option because you're relying on the expertise and experience and skill sets of the fund managers as well as the access to notes, right? They have those relationships in place in the marketplace to be able to take advantage. They have deal flow that's active in their space. And so it's a great way for investors that may be busy or they're focused on their career or other business activities. They don't have time to get into the fine details of mortgage note investing. And so passive investing can be a great option and it generates cash flow and income. And so, what I love is with notes, you buy an asset at a discount. Your investment is secured by collateral with tangible value, right? It's the real estate. And the third is that you can earn a really nice rate of return. And so when I looked at those three aspects and learned about that, I became very interested in note investing. And that's what got me started. That's why I'm so excited about this space. There's a lot of opportunity, and it's a great way if you're already in real estate to diversify a little bit, and it doesn't create any extra work for you.
Got it. Yeah. Thank you. So share me a little bit about how long you're investing, and also share me a little bit more about your portfolio and
Yeah.
what kind of returns you're getting, or if you are investing, if investors also investing along with you, what kind of returns you're offering.
Yeah, absolutely. I've been investing in mortgage notes. It's 15 years. I started in 2010, and it's been a wonderful journey. So I'll speak in general terms about the returns because it can really vary. But in reality, it comes down to this classic problem with investing. This classic approach is how much risk are you comfortable with? If you want low risk, super safe, you're going to earn a lower rate of return. And if you're willing to take on more risk, um, you can earn a higher rate of return in exchange for that, right? It's the classic dynamic of investing. And so with mortgage notes in this asset class on the residential side, I would say um, super safe notes are going to earn, you can earn, expect 5 or 6% rate of return. And then as we start to go up, where maybe a loan doesn't have a perfect payment history on it, or there's other problems, or the equity position is not strong, or other risks, um, or we're getting into business purpose loans, maybe where the rate of return starts to go up 8, 9, 10%, even get into the double digits, 11 and 12 is not uncommon. And so there's everything in between. There's no right or wrong answer. And it really comes down to how much risk are you comfortable with. But I always recommend for new investors, start on the safe side. start on the safe side, use that to be your learning experience. And then as time goes on, you can take on other risk factors and learn how to manage those and be good at it. And then, yes, you can look at higher rates of return.
Yeah, got it. So you might have already covered some of the points. So how do you evaluate risk and potential return for
Yeah.
of a note before purchasing it?
Yeah, this is a great question. It's all part of the due diligence that we perform on assets prior to purchasing them. And in my book on note investing, I've dedicated several chapters to the topic of due diligence. And I'll sum it up really quickly: is we look at the note itself, the track record, payment history, right? We can look at the servicing records and see have all payments been made on time, or is there some late payments here and there, or is the note behind? Is it several months behind? Even though it's paying every month, it could still be behind by 30 to 60 days recurring, right? And so you'll see all those different scenarios. In addition to that, we look at the property itself, right? Because it is a real estate investment. So we're going to consider the collateral, the property, what's the value, what's the local real estate market, what other liens are there against the property. We're going to look at all that and take that into account, as well as the borrower's financial picture overall, right? With most loans, when you purchase them, you can see the loan application package, and you can see what was submitted for underwriting at the time the loan was originated. And we also can look at the credit report on the borrower as well, to look at the current credit status and establish that way. So there's a lot of areas of due diligence, but definitely we look at the borrower, we look at the asset, and then we look at the note itself, its payment history and performance history.
Okay, thank you for sharing that. Do you focus on any specific markets or like buyers like with specific, uh, track record or history, something like that?
Yeah, we focus all over the U.S., so we buy nationwide, and the main focus for us is residential, and it's really the main reason is because that's what's most available in the marketplace. Yes, you could buy commercial loans and other types of assets. There's just not that many of them. Residential, the Fannie Mae, Freddie Mac residential space, there's an abundance of loans, and so that's where the most opportunity is.
So, what strategies do you use to acquire performing or non-performing nodes?
Yeah.
How do you decide which types to pursue?
Well, I like performing notes because you can look at the track record, payment history, as I mentioned earlier. Also, you're building cash flow immediately. A performing note is paying every month, and so as soon as you buy that note, you're stepping into a payment stream immediately, and so it's stable, it's predictable, and this gives you. Um, the predictability in your cash flow. That's what we look for as investors. And so, yes, there are many other types of notes that you can look at and buy, but this is what I like to focus on, and we've had a lot of success with that over the years.
Got it. Thank you. So, how do you handle a situation where the borrower stops making payments on your note?
Well, this is a great question. So, what we always look at is we have loans. They're all placed with the servicing company. The servicing company manages, monitors the note. They do a lot of the hands-on work. And so in a situation like that, the servicer, they're the ones who are going to do outreach to the borrower, establish communication, and start working with them. I find that having good dialogue and communication along with flexibility always seems to have the best results. And yeah, let's face it, sometimes notes will go into delinquency or get behind on payments. And usually what I found is most of those times it's temporary, some type of a temporary situation, right? People in general are not going to default on the note on purpose. It's because they're experiencing some type of hardship in life, something in their personal life. Maybe it was job loss or health issues, something like that. And so through the servicer working with them, doing outreach, and helping, there are always lots of options. And so flexibility is what always leads us back to getting things back on track again.
Got it. Thank you. So during your due diligence process, so what are the some key red flags you see, you look in the notes?
It really the rates on the notes, it comes down to how was it originated. Notes that we buy may have been originated 2, 3 years ago or 10 years ago. And so the rates are going to be whatever the rates were at the time, unless it's a variable rate note, of course. You see those as well. However, the interest rate environment, what it does is it dictates the pricing that we pay when we acquire notes and how much of a discount it is warranted. And so that's something that will fluctuate over time. The interest rates don't impact the note itself from the perspective of the borrower, but it does impact the resale value on the open market at the time of the trade. And so that's certainly something we look at and consider. But yes, it does result in pricing adjustments.
Got it. Thank you. So most of your notes or these borrowers, are they are like primary residences or investment properties?
It's both, but the majority, yes, are primary residences. But we see both. We see some that are rental properties. It's less common.
Got it. Got it. So how do you see like current market conditions like high interest rates or housing trends or economic shifts influence your note investing strategy?
Well, the influence that we see is that homes are always bought and sold. The majority of those transactions use financing. And loan originators have a business model where they originate loans and then the very next day they turn around and sell it on the secondary market. So there's always notes to buy. That's for sure. Certainly, their volume of refinancing has gone way down than from where it was a couple of years ago. However, there's still always loans to buy. The market is very active, and there's always opportunity for investors who are uniquely positioned. And so, moving forward, if the interest rates rise or fall, that's going to impact the pricing, as I said. However, it's not going to stop transactions from happening. That will always go on.
Got it.
And let's face it, people always have a need to move. People relocate for job reasons, or they need a larger house, or they want to move into a better school district to raise their family, or maybe they're downsizing, right? Empty nester, they need a smaller house, and so they'll sell. So properties always change hands on the marketplace, and that's an ongoing thing. And so this all creates availability of product. It creates liquidity in the market as well.
Got it. Thank you. So how exactly we can leverage self-directed IRA, uh,
Yeah.
as part of this node investing?
Yeah, I love this. So self-directed retirement accounts can be used to purchase notes. You can buy notes in your self-directed retirement account, or you can invest in a note fund through self-directed retirement account. If any of you have a relationship with a retirement account custodian, self-directed, if you were to ask them what's the most common asset that investors own in their accounts, the answer is going to be mortgage notes. It's the most common one that they deal with. So they're very familiar with these types of transactions and handling them. And it's really well suited because when you buy a note, you place it with a loan servicer and the note's owned by your IRA, it becomes completely hands off. The servicer handles all the legwork, and then you're receiving your payments in your retirement account. So it's a great strategy. I really love it. Whether you're investing in individual notes or a note fund and being a passive investor, all of the cash flow you're receiving going back into your retirement account, it's subject to that tax preferred treatment. So that can be very powerful. And over the long term, it makes such a huge difference in your returns and the growth of your account.
Got it. Got it. How exactly we can leverage health savings account also?
Health savings accounts, same way, exactly the same way as a self-directed IRA. You do that through your custodian. They're very familiar with the transaction, and HSAs are generally smaller in account size, but you can buy smaller notes in your account. And I love that strategy. It's really powerful.
Got it. So would you share any of your best experience, best note investing experience?
Yeah, I would say my best note investing experience that I have is, if you're getting started, don't make it complicated. Buy either buy decide if you want to be an active note investor or passive, right? Depending on how much time you have. And then start out buying a couple of assets, get some education. Maybe you choose to invest in a note fund and be a passive investor. It's another great way to start, where you get to leverage the expertise and experience of the principles of the fund and learn. It's like you're in the vehicle, in the car, in the passenger seat with an expert driving the car, and that's wonderful. Keeps you from making mistakes, and you learn along the way and earn money too, right? You're earning those returns. So great ways to get started, and start out with basic education, build some relationships with people in the industry, look for some good books on note investing, and start there.
Awesome. And would you also share any challenge experience?
Yeah, challenge experience. Um, Absolutely. Yeah. This is something that I've learned throughout my journey of investing. Whenever you're going to do any deal, any transaction, your due diligence, you can focus on looking at the deal, analyzing the numbers and all of that. But what about how much due diligence are you doing on the counterparty to your transaction? Have you looked into that? Who are you transacting with? And what's the way they show up in the world? So spend some time looking at that. It's important to deal with honest, reputable people that are going to stand behind what they're doing. You're building a relationship. And if you've built a good relationship, what happens is over time, you'll be doing repeat transactions, repeat deals, and there will be an affinity where you prefer to do transactions with someone you have experience with, because you know they're going to do what they say they're going to do, and the transaction goes without hassles, and things get done in a timely manner. And so that's very important. And so part of your due diligence should focus on looking at the other person or people involved and let that provide some guidance for you.
Got it. Thank you very much. So what will be your focus, next few years?
Next few years, focus is continuing to do education workshops. I love teaching and education, doing trainings, as well as uh, putting out newsletters, interviews, podcast interviews, sharing and building up a body of work, as well as investing, right? Ongoing. Always have investing as part of ongoing activities. And, we get deals go well, we make a profit. So the job we have as investors is to redeploy that capital again into new deals, right? You don't want that sitting idle. And so those are the main areas of focus.
So how many deals you do normally per year?
It varies. It varies, Rama. I would say between um, 50 and 100 per deal. Transaction sizes vary all over the place. Um, and it's it's a factor of what's happening in the marketplace at any given time, and is there liquidity, and is there deal flow. And so sometimes there's a lot going on, other times there's very little. What's interesting in the note investment space, the fourth quarter of every year seems to be the busiest time of year for us in the industry. A lot of things happening, transactions and opportunities. And so it fluctuates quite a bit.
Got it. Got it. So how can listeners can connect with you, Fred?
Oh, thank you. I appreciate that. Yeah, the best way to connect with me is to visit my website, which is fredmoskowitz.com. And if you prefer maybe an easier spelling, you can go to giftfromfred.com, connect with me there. You can learn more about my book. You can request a special report I have. Happy to send that out. Special report, a guide to note investing. And always love connecting with investors. So please do visit the site giftfromfred.com. Reach out, send me a message. I look forward to connecting with you.
Thank you very much, Fred. Thank you.
Thank you.